Good morning, traders. It is Wednesday, November 29th. We are about an hour before the open. You can see the SPY. This is the pre-open M5 chart. We'll be getting the GDP. This is our second shot at it, so we'll be able to watch to see how the market is reacting. Right now, we've got a nice market rally going. We're going to get into the market in just a minute. Disney, that was my last pick. That's how I like to start each one of these videos off. I like to review my previous pick so that you can see how it's performed and get a feel for how well this system works. In the last video, I went through about the last 2 months worth of picks, so please make sure to watch that video. Disney, this is a method that you can use. It doesn't take you more than a couple of seconds to do. It's going to save you a lot of money, help you avoid a lot of mistakes. I like Disney. I like this breakout. I like the fact that the stock was moving higher. This is an M30 chart because the last instructions that I gave you for this stock were that I wanted to set an alert. The 3 EMA was above the 8 EMA. So what we wanted to see was we wanted to see a cross where the 3 EMA was below the 8 EMA, and then we wanted to see a cross back above that 8 EMA. When that would take place, we'd have time to evaluate the stock to make sure that it has preserved its strength. The reason that we're being more cautious with this is because the overall market had been floating higher, tiny compressed candles. We were expecting at least a dip, at least a pause in here, and we want to be able to see how the stock would respond. Well, in this particular case, that is a nasty day of selling. And by setting this alert, we avoided a poor entry. And we can see that the stock closed on its low of the day. As we go into the daily chart, we can see that this is what we were leaning on. We like this nice march higher. We like this breakout through horizontal resistance. All of that looked good. We had a longer term breakout as well on the stock. So the stock right now is filling in part of this gap. Well, it's likely to continue to fill in that gap. Could this still turn out to be a decent pick? Well, after a bar like that, that tells me that the selling pressure is heavy. That tells me that buyers are not as aggressive as we thought they might be in here. So this is a tell. This is a tell that sellers are more aggressive than buyers. Well, that's not what we want. We want to know that buyers are going to defend this stock anytime that the bid is hit. They are replenishing their bid, replenishing their bid, replenishing their bid. And when that happens, you see price action like this. So the sellers are in there trying to drive price down, and they can't because there are buyers. In this particular case, the buyers are very weak-handed. The sellers are more aggressive. They're able to drive this stock down below that opening gap up. Now we're likely to test this price point right in here, the previous breakout, and the AVWAP-E, which must hold to have any hope for this stock to come back and do a little bid check, bullish hammer, then off to the races. Not likely. So the character of the stock has changed in one day. Let's take a look at that M5 chart. This is the price action that we saw yesterday and on heavy volume as well. So that tells you that sellers are in there. I would not touch Disney given the price action that I saw yesterday. So no harm, no foul. We didn't rush in. We didn't have FOMO. We didn't go in and take a starter position in here. If we had, we'd be stopping out based on that breach below that opening gap price right in there. Now you have to go under the premise that this gap is going to fill. So, mistake avoided by taking 5 seconds to set a very simple alert. We can do it on any variable. Create alert. Select the type of alert. 3-8 crossover. As I mentioned in the last video, using an M30 time frame. It knows that the system knows that the 30-minute 3 EMA was above the 8. So it knows that we need to have it cross below that 8 EMA, and then we know that the 3 needs to cross back above the 8 EMA. No harm, no foul in this one because it hasn't happened yet. And when I do get that alert, I'm going to be able to evaluate what did the stock do when that 3-8 cross happened. If it had pulled back just a little bit off the high and paused and gone sideways, and then the 8 moved back, the 3 moved back above the 8, great, no problem. That little tiny waiting period provided us with a lot of information. So that's how we use the alerts, particularly when you have a market that's been floating higher on light volume, that's vulnerable to a dip or a pullback. That's exactly when you want to be using these alerts for your swing trades, which that's what Disney was intended to be, a swing trade taking advantage of laggard stocks that should see a nice little rally into year end that have already shown us some decent buying power. So let's continue to go through and see what the market's doing. Right now, the GDP came out. You can see we've got a little bit of a pullback off of the high. Nothing too dramatic. I wouldn't expect anything too dramatic. This is our second look at GDP, so we shouldn't expect any big fireworks. The revisions are usually pretty minor. We're going to get the PCE deflator tomorrow, which gauges inflation. We already had a look at it last month, so this is the second revision, not expecting anything big. In fact, as I look out on the calendar, this is a really dry period as far as news is concerned. There really isn't anything in the way of earnings coming out. We have the Fed announcement coming up on the 13th of December, so that's a few weeks away. We've got CPI coming out just before that Fed announcement. We don't have the jobs report this Friday. It won't be coming out until a week from Friday. So those are the major drivers. And if we go into the D1 chart of the market, what you'll notice, and this is today's price action, is that we are within striking distance of that high of the year. This is a time to be cautious right now because we're seeing light volume and tiny compressed little bodies. And so let's talk about what this means and why it happens. Well, you don't get long green candles because there are sellers keeping a lid on the market. The buyers are still stronger than the sellers, but marginally. So they're able to get the market to close a little bit higher and a little bit higher, but they're not able to force these explosive moves because there are still sellers. And in particular, when you start seeing that pattern and you're getting up to a major resistance level, that is a sign that that resistance is probably going to hold, especially when you get a gap up to a new relative high. You need to be particularly cautious with this setup. So all along the way, for the last week or two, I've been telling everyone, listen, we've got this nice, strong move higher. Okay, so I'm not worried about down opens because a gap down presents us with the best day trading opportunity. That allows us to evaluate stocks with relative strength. It gives us time to find those stocks. We want to find the stocks that are ticking higher in that environment because once the market finds support, those stocks are going to lead the charge higher. The bid will have been tested by the market and buyers will come in and they'll gradually push the market higher. You'll also notice in this chart that there are tall wicks and long tails. What does that mean? And tiny bodies. Well, it means the market's going to move around intraday, lots of head fakes, but in essence, we're going to close pretty near where the market opened. that particular day. So that's the kind of price action that you can expect on an intraday basis. So again, once we get those gaps down, we have plenty of room for the market to rally to get back to that opening price, which we know it's likely to do based on this strength and based on the type of candles that we're getting. Market has a tendency to keep doing what it has been doing. Now, the one thing that I would be very cautious of on the long side is a gap up. Why? Well, first of all, we know that gaps up at a new relative high tend to be faded. That's exactly what we had happen off of the high of the year. Tiny bodied candles marching higher on relatively light volume. So we know that there are sellers. They're not as powerful as the buyers. That's why the market's floating higher. You get this big gap up, and now sellers see an opportunity to take profits, and they aggressively push the market down. When they fill that gap, they've got lots of momentum because it's boom, 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 boom off of that high. Well, everyone can see that that selling pressure is coming on volume, and then the programs start to kick in. By the close of the day, you get one of these long, bearish, engulfing candles. You can see the market tried to recover, tried to bounce over the course of the next couple days, but it wasn't able to get through. That's why we have to be careful with this opening gap higher today. So as far as any kind of dip or any kind of market pullback, I wasn't worried about lower opens for the reasons I just mentioned. I'm more concerned with a gap up because that's when we can see sellers really step up. So does this mean that today Pete is bearish and that the market is going to put in one of these and that the year-end rally is all over? No. What this means is we're going to evaluate that price action on the open. We are not going to get FOMO. We are not going to be in there frothing at the mouth, buying everything on the open like there's no tomorrow, like we are going to absolutely blow through and obliterate that high of the year. That's not what we're going to do. Instead, we're going to respect this big 10% move that took place over the course of a month. We're going to respect the fact that these are tiny bodied candles hitting a major resistance level. We're going to respect the fact that there is very light volume. So when the market gaps up, we're going to wait to see what happens during the course of the first hour. And let me see if I can pick out any kind of gap that's happened. Well, this gap, for instance, that we got on November 22nd. So, do we come in rushing, buying everything in sight? No. We're going to wait to see what happens, especially in the first half hour of trading. If there's going to be a reversal off of that high, and in this particular case, you get this long, nice gap, long green candle, hey, we're off to the races, blam, not so fast. And then the rest of the day, we just kind of muddle around. So if you rushed in and you bought here, you're holding the bag the rest of the day. In fact, you've still been holding the bag for a number of days. So this selling pressure was not able to close the gap. It was not able to fill the gap. Okay, that's a pretty decent sign. Come in, fill about half of it, and then the market is able to hold half of this gap, preserve it. That is a mildly bullish reaction because we're able to preserve most of it. It tells us that even though buyers couldn't defend the entire gap and they couldn't defend that move higher, they were able to preserve most of it. That means that the buyers still have the upper hand. That's the kind of thing that I would be looking for today. So you get this gap up, and then during the first 30 minutes, 45 minutes, you see this wimpy move lower with mixed overlapping candles. Might look something like this. So you're just kind of probing for support, but you're marginally making new lows and just barely able to start filling in some of the gap. That is a bullish formation. That tells you that buyers are still there and they're defending the move. And then once that support is established, the market will have a decent foundation to challenge that major resistance level. Do I think we're going to challenge that major resistance level today on this GDP number, on this 20-point S&P rally before the open? I just don't feel like there's that type of firepower. Could the market simply float higher? Could it be that asset managers didn't see this coming, that they didn't see that big drop in inflation, that they are playing catch up into year end, and that they're afraid that they're going to miss a year end rally? On a breakout, yes, you'll see some of them start to step up and support the market. So yes, we could flow through that resistance level. I'm not expecting any major volume. Let's see how the day unfolds. So I'm looking for a gap up, mixed overlapping candles. We preserve more than half of the gap. We have a nice support level that forms. Ideally, we get a 1OP bullish cross. If I have all of those elements, then I'm going to be favoring the long side, but I'm not going to rush in and expect that to happen right out of the gate. I'm going to be watching for any potential gap reversal. Now, if there is a gap reversal and if sellers are really stepping up to the plate here, what you will see right out of the gate, long red candle, long red candle, long red candle, maybe a pause a little bit, but within the first 45 minutes, that gap will be completely filled. And then if the volume is heavy, you'll see sell programs kick in, just like I showed you off of the high of the year, and you'll get a continual drift lower. I'm also not looking for that type of price action. And the reason for it is because this has been a very strong move higher. This move took 3 months to unfold from the top to the bottom. This move took 1 month to unfold. This tells me that buyers are much more aggressive than sellers. How did we pull back? 3 steps down, 2 steps back, 3 steps down, 2 steps back, 3 steps down. Choppy price action the entire way down with constant bounces. Okay, that tells me that there are buyers. How did we rally off the low? Did we see a rally, pullback, rally, pullback, rally, pullback? No, that's because buyers are super aggressive. That's what this price action tells us. We know that buyers are in control. The light volume in here does not mean bearish. It means the buyers are not in there full force buying. Could they be if we break out here? Could we start to see the volume pick up? Yes, we could. There'd be some asset managers trying to play catch up, and that's what I'll also be watching for. But these light volume rallies can pick up steam and they can pick up volume along the way. That's what we saw earlier in the year in March. The early part of that rally didn't have really much punch behind it, but as the rally matured, we started to see a lot more volume come in. So, gee, Pete, you gave me a whole bunch of different scenarios to look at. So what again is it that I'm looking for here? So we're going to wait for the market, gap higher. We're going to make sure that the gap holds. We want more than half of it preserved. We want to see that support level. That first hour is going to give us time to evaluate the strong stocks, and then we'd like to see that march higher and to challenge this high of the year, ideally to break through it, and ideally to start seeing some decent volume. If we get that, we can get behind it most definitely with some day trades, and we can get behind it with some swing trades. So we have been relatively passive in here with our swing trades. Yes, we have them on. We've been waiting for the dip. The dip has not come. Asset managers are waiting for the dip that has not come. And that's why you're also getting this little float higher, because they keep increasing their bid, trying to get some trades off, trying to catch any little dip in here that has not happened. So we're not getting the dip that we wanted either. So now we're just continuing to float higher instead of having a full boat of bullish swing positions on. We're waiting to see what happens until we start getting some volume to support that. So I've been showing you long in the money call positions that I would be taking on stocks. I like that play, especially when option implied volatilities are very low, which incidentally, right now, option implied volatilities are super low. So this is a good time to buy longer term, at least 2 months till expiration, in the money calls that have a high delta of 0.7, 0.75. Grind, grind, grind higher. But you don't go overboard with these positions. You don't put a bunch of them on. If we get this breakout, we close above the high of the year, the volume today is decent, and we grind, grind, grind higher, then you can add to those positions. So we're at a nice juncture right here. Because I don't know how the market's going to open up, I'm going to go through, flip through some charts. Yes, we're going to stay bullish right now. Let's make sure we don't have a gap reversal. We by no means want to see a long bearish engulfing candle like this. That would be a sign that the high of the year is in. So be very careful on these gaps up, because once that's in, that's the price action that we saw. It was a material dip. Again, I'm not looking for that. We got the Fed coming up in 2 weeks. The Fed's likely to pause in December. The market is pricing in a pause in January. Fed has some breathing room. They got some relief on the CPI. That is a major material development, because interest rates have been keeping a lid on the market for a long time, and that's why we got a rally with that type of strength. So look for it to continue to inch higher in here. We'll go through the list, take a look at some stocks. PD, I like this breakout right through here. A little bit ahead of itself. I don't want to chase a stock like this. It's going to need time to digest those gains in here. Let's let it do that. I'm going to remove those shorter term EMAs, and I'm going to actually load up a different chart template in here, and we will go with this one. Okay, so yes, this stock needs time to digest those gains, and let's see if they hold. If they hold for, let's say, a week or so and can't get into this gap, then the stock is probably going to continue to move higher. This is a nice breakout on PANW. I like this. If it had decent premiums, could you sell a bullish put spread below this breakout right here? Yes, you could. And we go look at some of those, see where they come into play. I would like to stay inside a couple of weeks. 260, 250, we're probably not going to get much premium for that. And if we sell the 260, 250, 260, you can see we get a credit of 26 to 44. We need 50 cents for that. Could you really try and press it and go into that $65 strike price? You could. It's going to be right at that high, right at that resistance level. You're only a couple weeks out. So let's take a look at that. What do you get for the 265, 260, 250? There you can almost inch out your 50-cent credit. Fairly aggressive trade, but the stock actually looks decent. Will it pull back if the market pulls back? Absolutely. This is a nice breakout. Market stays flat. It'll hold all these price points, but you can see, wham, this stock does have some volatility to it. It did hold up well relative to other tech stocks. when the tech sector was down, 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 this stock was actually holding its own. So I'll show you what I mean. Put up QQQ. When the market was doing this, PANW is actually holding its own very nicely. Incidentally, you can see this nice breakout in the tech sector through this horizontal resistance level. So yes, tech stocks are also getting a nice little move higher here. So let's take a look and see. So I wouldn't be crazy about PANW. It has set up very, very nicely for day trading. We've been all over it in the chat room. You got these nice long stacked green candles with some follow through in here. Previous day you had a nice move higher, but again, very jerky. Coin has been excellent. Get this nice move higher, and look at this move right in here. Once you break out to a new high of the day, you start relentlessly moving higher. You could have waited for this pullback right in here. That's where that 3-8 cross would have come in handy. You would get your 3-8 cross here, the 3 crosses back above the 8 in here, and you have a very nice entry point. Here's the key. Yesterday, volume very, very light for the market, but the stock had very nice volume. So we're going to take a look at Microsoft. Has been the best big tech name on the board. Roku, and I'm talking about Google, Amazon, Meta. Microsoft has definitely been the stronger. So you can see we've got this technical breakout right here through resistance. Roku has been very nice, also really strong stock on the day trading side, but volatile. You know, the market hasn't done much. If we take a look at the 5-minute chart from yesterday, this is what you got. One nice rally and then a pullback, which one final note on the market is that you look at the D1 chart, you see these tiny compressed candles, you see wicks, you see tails, and you see that the market closes basically where it opened. That tells you you're going to have a decent range, but the close is going to be fairly close to the open. Okay, well, that's where the open was. That's where the close was. Pretty small-bodied candle. You test the downside early. You get this nice big rally up. It doesn't hold. This looked like a nice breakout through multiple day highs, and then all of a sudden you start retracing this long green candle, and as soon as you're below this open, you know that this breakout was just a fake. Now you just continue to fall back into that range. So this is the type of choppy price action that we've seen without a lot of news to really fuel that market breakout. So Roku held up quite nicely. There's where you had your market pullback right in here. Well, the market finds support and the stock starts grinding higher through this downward sloping trend line. It held the VWAP. So all good stuff. AFRM. This is a nice, tight pattern on heavy volume. I like AFRM. That is going to be your pick of the day. We've got this horizontal resistance level right in here, broken to the upside. This is a horizontal resistance that I would expect to hold. And if we take a look at a bullish put spread that we could sell on this particular stock, where might we be able to do that? What is the kind of the price level that we'd be able to lean on? Well, this 27.50 level right in here was support, was resistance, is now support. And you get that type of buying on heavy volume. Yes, this stock wants to go. How could I play this? Well, again, in the context of we don't really know what the market's going to do. We'd like to play it a little bit safe here. We want to make sure that we have that breakout to the new high of the year. We want to make sure we don't get one of those big bearish engulfing candles on this gap higher. Well, what we're going to do is we're going to look for a stock that is going to have nice support that we can lean on. So we're not necessarily chasing this rally in here. We want a little bit of a pullback. We'd like to own the stock. I'm going to show you selling a naked put on this stock. Would I be a willing buyer of this stock at $27. Well, it's at $32.50 right now. So I would be able to buy it $5 cheaper. So December 15th, got to wait about 2.5 weeks. And what I'd like on a naked put right like this is I've got to put up 20% of the strike price in margin. Your actual margin is going to be lower than that, but let's go with it. So if I'm selling a 27.50 put, then I've got to put up about $5,500 on a 10 lot. I'd like to get 55 cents for that. If I can do that, I'm going to generate $550 or a 10% return in 2.5 weeks. I need to want to buy that stock. I need to be willing to buy that stock for this strategy to work. I need to have the money to be able to buy that stock at minimum on margin at $27. Because if I get 55 cents for it, 27.50 minus 55, my cost is roughly going to be about $27 on it. That is your trade of the day. I'm trying to highlight more swing trades for you because the market is conducive for starting to do some bullish swing trades. This is a powerful move. Buyers are in control. We can expect a little bit of a dip in here somewhere, a little bit of a pause. Is it going to come off of that gap higher today? We don't really know. So we're going to line up some trades that are going to generate a nice return for us while we wait to see what happens. If we blow through the high of the year today, the volume starts to pick up. I'm going to get more aggressive with my swing trades. I'm going to add to some of my swing trades that I have on, and I'll be day trading from the long side. Is it going to happen? I don't know. I don't think we have the catalyst or the firepower in a second GDP number to do that. But certainly by the time we have CPI, well, we've got the jobs number first. Maybe the jobs number will be supportive of a market move higher. It's certainly a big enough catalyst. If that doesn't do the trick, certainly the CPI and the FOMC combo in the middle of December could give us that push to a new high of the year. And think of how nice it would be for investors to open up their year-end statement and to have the market closing on the high of the year. It's going to be a nice, warm, fuzzy for them after a bear market in 2022. Asset managers would like that as well because they're going to make more money because their asset base is larger and they make money on a percentage of assets. So there is disincentive for asset managers to sell into year end. And they've got good news in the form of the Fed pausing for the next 2 months. So there is absolutely no reason to be bearish right now. There is reason to be cautious and long and to look for an opportunity to add to those positions if we get the breakout that we're looking for. Thanks so much for watching, everyone. I'm going to try and do my first YouTube live event next Wednesday. So please watch for that sign up. And I will also mention it Sunday evening if everything pans out. We think we've got everything that we need logistically to make it happen. So watch for that. Please register for it. Trade well. We'll see you soon.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.